Welcome back, everybody, to Sound Family Dwelling. I'm your co-host, Chris Angel, with Mark Jacobson, your host. Mark, how are you today?
Hello. Hey, Chris. How are you?
I'm good. It's episode 2.
Yeah.
And in episode 1, we kind of left off talking about financing in a transaction up until the point where a buyer writes an offer.
You
And
bet.
today I want to kind of explore with you sort of after we write an offer, what happens on the financing end of a transaction.
Sure.
So, but before we do that, I teased out in the first episode, maybe hearing a little bit about how you came up with the name Sound Family Dwelling.
Yeah.
So give me a little backstory on that.
Yeah. Well, I mean, this is about real estate. So the dwelling part is obvious, right?
Yeah.
And we're talking about where people live and their properties that they own, et cetera. And then family is a big part of that. Family is a very big part of my life.
Yeah.
I have a wife and 2 kids, and they mean everything to me, as well as my extended family, and and a lot of my friends I consider family too, and their families, right? So, and then the sound part of it. So Sound Family Dwelling, that originates from a couple of things.
Yeah.
One is my background is I'm very much into music.
Okay.
And so sound, it's a big part of my life. I just thought it was a great word to use for that, because also this is the Puget Sound region.
Right.
And
Yeah.
so,
Yeah.
like I said, sound is a big part of my identity. I'm really into sound. I used to do sound recording.
Okay. I didn't know that.
I don't do so much that anymore, except at home with the family sometimes. And then also listening. I love to listen to music. I've always got something playing usually.
Yeah.
And I'm really into, we put in the logo, we put a vinyl record to kind of indicate that, I'm really into that type of thing. And so that's a lot of fun for me. And then I would also say that the sound family, it also has to do with the sort of state of being that you're in, and making sure that your standard of living, or where you're trying to live, is a sound choice for you, and that your family is living soundly. So there's multiple meanings there.
I love it. Yeah, it's packed with meaning. It's great. I mean, it's pretty rare when you can get like 3 or 4 different angles on, one phrase. It's pretty awesome. I love it.
Yeah, it's fun.
I love it. I think the reason I really wanted to explore it with you is because I just, I've been 17 years in the industry, the real estate industry, and I'm just so tired of the same old real estate stuff that gets marketed out into the world. And I feel like as a consumer, I want to know people. I want to know who my agent is. And so I love that you were able to find a brand or a name for the show that really kind of conveys more than just, this is about selling a house. This is about not just the area we live in called Puget Sound, but it's also about a state of being, having a sound family. And I also like the idea that you're bringing a piece of who you are in terms of your high fidelity, your sound preferences and your vinyl interests, right, to us. And I appreciate you just sharing that, because I think that makes you human. So
yeah,
I love it.
It's fun. You got to make it fun.
You got to make it fun. Exactly. Well, let's dive in. I want to dive into the second half of the loan process when we're under contract. So let's say that the buyer has written an offer, and they've the contract has been accepted by the seller, and are like ready to go. How do we close this thing?
Well, the first thing you do once that happens is you go, woo, yeah.
Yes, woo.
And because that's a very exciting step when you finally get the house under contract.
Yeah.
It's so much fun to do. And then once that happens, you take that contract and you give it to your lender. So where you went and got pre-approved or pre-qualified, you call that company up, or that person, your loan officer, and say, hey, we got a house, we got it under contract. You give them the full purchase and sale agreement.
Yeah.
And then that purchase and sale agreement also goes to the escrow company, and either you will do you typically it's actually a real estate
Right.
agent that would do that. So I would do that for you.
Right.
And your escrow company, for those who are not aware, escrow is a non-interested third party that handles the coordinating of the closing of the purchase between yourself, the seller, the real estate brokers, the lender, the title company, and the county in which the house resides. And we can get into that in another episode.
Absolutely.
But that's where you're going to turn your earnest money in typically. So, and your earnest money is usually due, the day or the next day after you go under contract. So just be aware of that. And again, that we can talk about those things in another time.
Yep.
But anyway, what your lender does once they get the contract, they start going to work. They will, if you haven't already, you give them your documentation on your employer, such as your pay stubs. You'll give them your bank statements. Usually they ask for 2 or 3 months back on your bank statements.
On that, Mark, is it a good best practice to kind of have that done before you're looking for properties?
Yeah, like I said, if you haven't already done that, that's where you're gonna. But oftentimes you're gonna give them updated bank statements and updated pay stubs.
Yeah.
So yeah, in the previous episode we talked about the various stages of approval, and one of the more verifiable or I'll just leave it with that. Stages of approval is when you've submitted your bank statements and your pay stubs and your tax returns and W-2s to your employer. So they can give you the best approval letter that they can. But anyway, they'll probably ask you for updates on that, because that may have been 2 or 3 weeks ago that you originally did that. So you've since that time gotten another paycheck or a new bank statement, etc. So then essentially what I'm getting at is they'll take all of this information and they'll submit it for underwriting.
Got it.
And underwriting is the process that the bank or lender goes through to look over your qualifications with the documentation that they have. They do verifications, so they'll call your employer or somehow contact your employer for verification of your employment and your income. They will do something similar with your bank. They call it a verification of deposit. In addition to that, they will order an appraisal on the house or the property. So that is generally the next step that the lender takes is the appraisal. Appraisals can take anywhere from a few days or up to 2 weeks. I've seen them take even 3 weeks because the industry was so busy.
Right.
And typically it's a longer process time for an appraisal if it's a government loan, meaning an FHA or VA. At least that's what I've seen. So then
on that too, on the appraisal, typically lenders won't order that appraisal until the inspection's been satisfied. Is that true? Have you seen that?
Yeah. So in your contract, generally you're going to have an inspection period where you have the chance to hire an inspector to come out and really take a detailed look at the house. The condition of the roof, the foundation, the plumbing, the electrical, and they look at all kinds of things. And during that period, you get an inspection report back from the inspector, and you go through it and you make a decision as to whether or not you're okay with the house as it is, or whether you want some things to be fixed by the seller. And so you go through a negotiation period again with the seller as to what you want to have fixed. And we could spend actually, Chris, a whole episode on the inspection, because there are good ways to go about it and there are not good ways to go about it.
What's the time frame like right now, as you're seeing over there in the Puget Sound area? Are you seeing 7 to 10 day turnarounds on inspections, or 5? Like, what's the time frame?
Yeah, so the the default on the inspection form, which you don't have to use, but the default is 10 days.
Okay.
You know, they're really, like you're indicating, they're really more around 7 days or, you know, 5 days, something like that. In this market.
Yeah.
And also you see a lot of inspection waivers where they're actually waiving the inspection.
Because it's so competitive.
Because it's so competitive.
Yeah.
Or they do what's called a pre-inspection, where you have the opportunity to go in and inspect the home prior to even making an offer. So that is more typical when the seller puts their home on the market. Let's say they put it on the market on the 1st of the month. And in the listing, they state, okay, we're putting it on the market today. However, we're not going to make a decision on an offer until the 8th.
Right.
So you've got a whole week to get this figured out.
Yep.
And
wow,
it's called an offer review date. And so anyway, during that time frame, you can possibly set up an inspection to be done prior to even making the offer.
Got it.
Yeah. So those are all the different aspects. Like I said, we could spend a whole episode just on the inspection.
I think I asked about the inspection just for the time frame of like when the appraisal will get ordered. It's like it's not the same day you turn your contract in. It's gonna the lender won't really order that appraisal until a little bit a week down the road or so.
Right. And that's one thing that's important to know about your contract is that you have that contingency there.
Yeah.
You have a financing contingency usually, but you also have the inspection contingency. So if in that time frame you find something majorly wrong, the foundation's cracked and it's going to cost you $30,000 to fix it, and the seller's not willing to do that themselves or whatever, you have an option to get out of the contract with, you know, not losing any of your earnest money or anything like that. So just a little side note, be aware of that.
Yep.
But I'm glad you asked about the inspection because yes, in regard to the lending or the lender, in that part of the process, they typically will not order the appraisal until that inspection period is done. And a big reason for that is that, for one, they don't want to waste their time in case you're going to get back out of the deal because the inspection showed something that you didn't care for and you wanted to get out.
Yeah.
But also, you pay for the appraisal. Typically, you pay for that up front. So your lender is going to require that you give them payment for the appraisal before it's even done.
Oh, okay.
Yeah. And that's about a $400 to $500, depending on your area, $400 to $500 expense to you. That's up front. So, you know, if you pay for the appraisal and that's ordered, you know, right off the bat, and it turns out that you back out of the contract because of the inspection, then, well, you just lost money for no reason. So that's a very, very good point.
They're really important. Yeah. So let's say that actually I wanted to ask you this too about appraisals the underwriting. Can I ask you about underwriting?
Sure. You bet.
I know for me, when I was selling real estate, I could have a really good lender, but if that lender had an underwriting department that was backlogged or wasn't very communicative or something, it could really throw a wrench in the transaction. So I used to tell people, like, look, you want to find a lender who has a good relationship with the underwriting. Do you find that still true, or has that kind of been fixed in the industry?
Well, I think it's true. And I think most do have good relationships with their underwriters.
Yeah.
So, you know, you're probably okay with that.
Right.
I've got a guest that just walked.
Special guest.
Yeah. My son just walked in the room.
Nice.
Yeah. So I think he's going to come say hello. Yeah,
I like the outfit too.
Yeah. He's really into Mario.
Awesome.
So anyway, I think most do. I haven't really seen lately anyway, a lot of lenders that are not really tight with their underwriters,
Yeah.
but that certainly it can happen.
Yeah. And my experience was back pre 2007 when, lending guidelines were super loose and, it's like,
Yeah.
So I'm sure that that's fixed itself over time.
Yeah.
So got it. Okay, good. So the lender orders the appraisal, and then what happens? We get then what?
So then the appraisal, once the appraisal's done, is completed and is turned back into the lender then takes that and moves it into final underwriting and approval.
Got it.
So, this is all assuming that the appraisal came back at the value at which you're going to purchase the home.
Yeah.
Now, an approval can be either a final approval or it's an approval with conditions.
Okay.
Conditions, what that means is that the lender says, okay, we've approved you, condition on re-verifying your employment, or gosh, we need one more thing from your bank, or we need an updated bank statement.
Sure.
Or
credit score.
Credit score re-verification, or a clarification of something on your credit report, or a clarification of something on your pay stub.
Yeah.
So I see that sometimes with people who work a lot of overtime. Right? They work a lot of overtime, and so they want to get a clarification as to whether or not that's a regular thing, or if it's just something that happens every now and then. Yeah, it's just an example.
Also, too, when people will, the horror stories of people who will go out and buy a couch or open a new credit card after they've written the offer, but before that final verification, and so underwriting sees there's this new credit line or their credit score has been affected, right? Like that's a no-no.
You're right. Yeah.
Like don't buy a car, don't buy a couch. Don't.
Yeah. Yeah. So, that's a very good thing. We can't emphasize that enough, can we? That when you start a loan process to buy a home, or even refinance your home, we're talking about buying a home here, you don't do anything.
Yeah.
Don't make any other major purchases in your life.
Just freeze. Just
freeze everything until your transaction's done. Then you go buy your car.
It's because of that final verification. Like if that verification, that final sweep of what's going on with the borrower, which is you, if you're listening to this, right? Like they're looking for, is there anything that's changed the financial picture of this person's life?
Right.
Yeah, and if you spook the underwriter, the underwriter might say, "Hey, you're a different borrower now. We can't loan you this money."
That's right.
Yeah, that's it's happened more than once for sure. Okay, got it. So, so once they satisfy those conditions, what happens?
At that point, then you get loan documents.
Mm-hmm.
So the loan documents go to escrow.
Okay.
And the escrow, like I said earlier, escrow is the third party that closes the transaction between you and all the other parties,
right?
Lender, county, etc. The escrow company will notify you that they've received the documents, and they'll set up an appointment with you to come in and sign the documents. So here my assistant's back to help.
I like it.
Help again.
It's very good helper.
Yeah. And so say hello.
Hello.
Oh yeah. And so the escrow company has you come in, sign the documents, and the seller will also come in and sign their documents.
Yeah.
And then that all goes back to the lender, and the lender takes that information, and then they fund the loan. They send the money to the escrow company.
I like it.
And at that point, then the escrow company then records it at the county. Isn't that right?
Is that what happens?
Yes.
Yes, he said. Yes, he
okay.
said. Smart. He's a future realtor.
That's right.
I like it. So, okay. So by that point, then, when you say like the documents, that's really like the contract with the lender. Like that's what you're signing your name to for the loan, right?
That's right.
And we call that documents, but there's like, 5,000 documents. It feels like.
Right. Oh yeah. Your hands are going to be tired. So you need to do a lot of this, a lot of stretching.
Right. A lot of stretching. Yeah.
Yeah.
Got it. And so once they sign, like I remember it's different in different states, but in Washington State, the day you sign at escrow isn't necessarily the day that you get keys and can occupy the home, right?
Well, yes, you can. You do get the keys that day.
Okay.
But there's most people get the keys and they can enter the home. Yeah. But I believe it's 9 p.m. that day is when you have the official right to.
The magic sauce to it is the funding and recording, right? It's like when you get recording numbers for the transaction at the county, that's the magic, right?
That's right.
Because that's when the actual title transfers from their name to your name. So there's a documented transaction number called a recording number at the county that says, okay, this property now belongs to you. And now that's when you actually have permission or legal rights to enter the property.
Yeah. Once it's recorded.
Yeah.
It's recorded in your name. You are the new owner of the property.
If you had, and this is, I had some of my own horror stories early on in my career.
Okay. I'm doing okay. Are you okay? All right.
When
Can you help Amiibo Mario?
Mario.
We can do that in just a minute. Can you give me a kiss? Thank you. Okay. Go downstairs. I'll be down.
That's cute. So when I remember having some horror stories where people would take possession of the property after they had signed, but they didn't have recording numbers yet. And so if they moved into the property and for some unknown reason the house burned down, the house would have burned down in the name of the previous owner before it had ever transferred to you as the new owner. Does that make sense?
Say that again.
Yeah. So the recording never happened at county. And so the property still actually exists in the previous owner's name. And so if the house burned down before recording happened, even though the buyer had moved in, that would be really bad for both parties.
Yeah. Oh yeah.
Right?
Yeah, that makes it very precarious, very awkward. Yeah.
So you never want to move into the property until you have those recording numbers.
Right.
Yeah.
And
if an agent tells you like, oh yeah, no, it's no problem. Like we can move in. Recording hasn't happened yet, but we could totally do that. Like don't believe them.
Right.
It's very dangerous.
Yeah. No. Yeah. Avoid that. Yeah. Definitely.
Yeah. I may or may not have been that agent that had said you could move in early.
Oh.
And
unfortunately, I've never had to deal with that.
Yes, don't ever deal with that. It was very precarious, and it ended up killing the deal. But yes, so that kind of wraps it up. Like once you get recording numbers, congratulations. Like it's another woohoo, right?
Yeah. Then you go woohoo.
Woohoo. Yeah, exactly.
Followed by oh wow, this is it.
I think what's always amazing to me in unpacking the transaction, a real estate transaction, is how complicated and involved it can be. And I know in our industry for a long time, realtors have wondered, or people have wondered, like, will the internet replace realtors? And I can never get there in my head because I know I've seen behind the curtain all the different things that happen to get this thing to close. And so I think that's a lot of job security for real estate agents. So
yeah, I mean, it definitely helps to have a person there who's an expert, who knows the process, can guide you through it.
Yeah.
Absolutely. There's almost like a tangible aspect to it. There's someone you can reach out to.
Yeah.
And
there's somebody, there's so much finessing in the background that happens with an agent talking to a lender and a lender talking to an underwriter, somebody talking to an appraiser, trying to find everybody getting this thing on track to close that, just an app won't fix for that.
Right.
So,
no.
Well, this is another good episode, Mark. If people want to reach out to you about buying a house or learning more about the buying process, the loan process, What's a good way to get a hold of you?
Well, they can email me at seattlehomes2010@gmail.com.
Mm-hmm.
You can also email me at soundfamilyvalues@gmail.com.
Perfect.
So yeah,
I like it.
Yeah, I'd love to hear from anybody and at least answer questions, help them along the process.
Awesome, Mark. Thank you for another great episode, and I'll catch you in episode 3.
Awesome. Thank you, Chris.